Are you concerned about higher monthly payments if you are considering selling your current home and buying another? Many prospective sellers and buyers are because they have significant home equity but would not receive the proceeds of their sale until after the new purchase closes, which can often take 30 to 45 days. If that sounds like a concern, enter the mortgage recast. What is a mortgage recast? A mortgage recast is where you apply a lump sum to your remaining mortgage balance and then the lender re-amortizes the loan with the same end date as you had originally. It does not shorten the loan term and it does not change your rate. This lowers your monthly payment because the principal is reduced dollar for dollar by the amount of the lump sum payment and then the subsequent recasting. There is no such thing as a reverse recast nor a cash out recast, so there's really no way to access home equity or to increase the loan amount with a recast. What loan types allow recasting? Not all of them. Recasting is most common with conventional loans. Government loans such as FHA, USDA, and VA do not allow recasting, but as an aside, if you are having trouble making payments on these types of loans, sometimes they do have loan modification programs, so the best place to start, if that's what you're looking for, is contacting your current loan service provider. When is recasting common? We are seeing this more and more frequently now for people that are selling homes and buying different homes. Sometimes this is voluntary, other times it's due to relocation, downsizing. There's a few reasons people would need to buy and sell. The lump sum does not have to come from a home sale, of course. It could be from an inheritance or a winning lotto ticket. Any reason that you'd want to put a lump sum down is fine. Since in many areas it is still a seller's market due to limited inventory, buyers strive for the most competitive offer they can put forth. To have a competitive purchase offer in a seller's market, it's usually not ideal that the offer be contingent on selling the current home. To help make more competitive offers, buyers put down a small amount on their purchase with the intent of recasting the mortgage after their current home sells and they receive the proceeds. This will then reduce their monthly payment to the amount as if they had put down the full amount from the beginning. As an example, Betsy currently lives in Ohio, but her job is relocating her to Pennsylvania. Betsy suddenly finds herself to be both a buyer and a seller. Betsy is moving in a seller's market. She has $100,000 equity in her current Ohio home, but buys a new house in PA to be able to make her move easier. After she has an accepted purchase offer in Pennsylvania, she then lists her current home for sale in Ohio. She first closes on the purchase on the new home in Pennsylvania, and then a few weeks later closes on the sale of her Ohio home and receives the proceeds. Betsy then contacts her new mortgage servicer to find out how to apply the $100,000 equity received from her Ohio home sale to reduce her principal balance and recast the mortgage to lower her monthly expenses. This would be close to the same as putting down the $100,000 equity in the Ohio house from the beginning. But equity is often hard or costly to access prior to a sale, so this is a different method of accomplishing that. Great, so how do you do it? How do you recast? First, don't just make a lump sum payment. If you just make a lump sum payment, your payments will remain the same and you will pay your loan off more quickly than the original term. If it's not your intent to pay the loan off more quickly and it's your intent to recast, then you need to contact your current lender to find out if they allow recasting and find out their process. Most lenders have minimum amounts of a lump sum payment that qualify, such as $5,000 or $10,000 minimum, and the recasting fee is usually $200 to $250, but they vary by lender. Why would someone want to recast? It can reduce mandatory monthly cash flow and can help those that are on a fixed income. For some, the interest rate is so high that it can save lots of money over the life of the loan by reducing the total interest paid. And how is a recast different from a refinance? A refinance is a more involved and costly process with many more fees where you can change the loan term, change the rate, add or remove people from title. It's just more involved than recasting. Since many are now buying with the intent to refinance in the future, a recast would also not hurt your ability to refinance down the road. That about covers recasting. If you have any questions, please ask.